This will be a big warning to all Bitcoin holders.
Hi guys, I've watched the latest videos from top crypto YouTubers and prepared a summary of the most important points for you. More and more YouTubers believe in a further decline. Some are becoming more cautious, while others are doubling down on their optimistic forecasts. There's a lot of interesting tension in the air. Let's get right to it and hear what they're saying right now.
Starting to confirm a new warning signal in the short term.
The sellers have fully exhausted the buyers.
This is truly something I am very afraid for.
It represents the end of an era.
Bitcoin going to 36,000.
When I zoom out to the long term, I've got some bad news.
You need to act fast.
Crypto Rover is straight up selling. He points out that Bitcoin is retesting a major historical support level, now acting as resistance, a textbook bearish signal. Funding rates have flipped positive, which often marks a local top. He's hedging his big spot bag with a solid short and targeting a lower low around the $60,000 zone before any serious rally. He also expects the correction to pick up speed around May 4th, following the classic sell in May and go away seasonal pattern. Benjamin Callen stays ice cold on the macro picture. He says the bear market resistance band is still holding strong. Bitcoin is struggling to stay above the old bull market support band, which has now flipped into resistance. Interest in crypto has turned into full apathy, just like we saw in 2019. His mathematical base case still points to a final cycle bottom somewhere around October 2026. Until we see a strong reclaim of the moving averages on high volume, every pump looks like a dead cat bounce to him. MMcrypto drops a scary historical parallel. Every time a new Fed chair takes office, Bitcoin has taken a major hit. Following that pattern, a 50% retracement could take us down to the $36,000 to $38,000 zone. Chris is still all in fundamentally, but he's warning that the real cycle low might not arrive until late 2026. He sees possible support in the $50,000 to $60,000 area, but technically, the door for a deeper crash is still open. Jason Pizzino agrees the overall market structure remains bearish. Bitcoin is testing the $79,000 to $80,000 resistance zone, but hasn't shown the kind of strength needed for a confirmed new bull run. He thinks we're in a corrective rally rather than a real breakout. One more leg down to exhaust sellers is likely before a sustainable uptrend can start in late 2026. His advice? Stay patient and don't FOMO until we clearly break and hold above major macro resistance. BitcoinHyper is sounding the alarm after Bitcoin failed to hold above the psychological $80,000 level. He sees a potential rising wedge breakdown, a very bearish pattern that often leads to sharp sell-offs. He's looking for long entries much lower, around the $76,600 golden Fibonacci level. His warning is clear. Don't get caught in a bull trap here. MegaWhale Crypto is also very skeptical. Bitcoin has broken below its 20-day uptrend, there's a clear bearish divergence, and the recent pump looks like a fake out to trap late longs. If the trend line fails, he's watching for a major leg down toward $48,000 to $52,000. He advises staying in cash or hedging until a real reversal signal appears. On the more balanced side, Thomas Kralow says, trade what you see, not what you feel. Bitcoin is at a make or break point around the $64,000 support. As long as we hold above it, the uptrend is technically alive. But a break below could open the door to $52,000. He's waiting for a confirmed breakout above local resistance before adding new longs. Capital preservation comes first. Crypto world, Josh sees short-term cooling. Bitcoin is retesting the $72,000 to $76,000 zone after a breakout. There's a bearish divergence on the S&P 500, which could mean some slowdown for both stocks and crypto. He notes big short liquidity sitting between $79,500 and $80,000. Expect some chop or a slight pullback to clean out weak longs, but the ultimate magnet remains new all-time highs. CryptoKid warns that the era of easy money is over. With inflation at 3.3% and energy costs rising, hoping for aggressive Fed rate cuts is absolute idiocy. Bitcoin is tracking the bearish patterns from 2018 and 2022. so a sell-in May move is on the table. He's still accumulating BTC long term, but he believes a real alt season and Supercycle won't fully ignite until liquidity returns, possibly not until 2029. For now, expect slow, laddered escalation rather than euphoric parabolas. Satoshi Stacker finds Bitcoin a bit boring right now. The real explosive volatility is in AI stocks and tech. He's moving part of his capital into the stock market to ride that wave while crypto consolidates. BTC dominance is testing key levels, and the easy 10 times in crypto might be on pause until macro conditions improve. Simple rule, follow the money. And right now, it's flowing into AI. Now let's hear from the bulls. Lark Davis is fired up. The bears are absolutely wrong. He points to 46 straight days of negative funding rates, a signal last seen at the 2022 bottom. This extreme bearishness is perfect fuel for a massive short squeeze. He believes the bull market still has 2 to 3 years to run, and Bitcoin is going well above $100,000. Institutional inflows combined with retail apathy are classic signs that the real parabolic move hasn't even started. Ivan on tech is ultra bullish and tells everyone, don't let them shake you out. The current consolidation is a giant trap for weak hands. He focuses on massive institutional adoption and the supply shock from Bitcoin ETFs that the market hasn't fully priced in. We're in a super cycle where the old 4-year rules might no longer apply. Ignore the noise, hold your positions, and get ready for a parabolic move that will catch the bears completely off guard. Conor Kenny says stop obsessing over short-term noise and focus on the cycle. The macro structure is still intact. This brutal correction is just flushing out weak hands. He prioritizes long-term conviction over daily volatility and suggests building passive income streams while the market overreacts to 5% moves. The House of Crypto declares that the era of the classic 4-year cycle is officially dead. We've entered the age of institutional dominance. With spot ETPs approved and new regulations like the Genius Act, Bitcoin is now a digital commodity fully integrated into US capital markets. Local volatility around $80,000 is just noise. Any dips are buying opportunities for the giants as Bitcoin prepares for a structural shift toward $100,000 and beyond. So guys, that's the full spectrum right now. From deep bears calling for $36,000 to $52,000 and a bottom in 2026, to strong bulls who see this as the calm before a massive short squeeze and new all-time highs. The truth is probably somewhere in the middle. Short term, we might see more chop, a possible sell in May move, and some liquidity grabs lower. But the long-term structural story, institutional adoption, ETFs, and growing recognition of Bitcoin as a digital commodity remains very much alive. My personal take? Stay disciplined. Don't go all in on emotion. Keep some dry powder, protect your capital, and have a clear plan for both scenarios. The market loves to shake out as many people as possible before the next big leg. Drop in the comments, are you Team Bear or Team Bull right now? And which YouTuber's take resonated with you the most? If you enjoyed this digest, smash that like button, subscribe, and turn on notifications so you never miss the next roundup. Thanks for watching, and I'll see you in the next one.